Carmakers say the future's so uncertain they can't offer guidance. So, what will tariffs do to America's car industry? This is Sectors Up Close, and we're talking carmakers. Ford has become the latest company to pull its annual guidance because it says the tariff picture is so unclear. It did say the duties would cost it about $1.5 billion. Those shares sank in after-hours trading, and overall the S&P Automobiles sub-index is down more than 28% this year since it became one of the key targets of the new administration's tariffs. Well, Eric Lynch is managing director at Scharf Investments. Eric, a number of carmakers say the picture is so uncertain they can't offer guidance for this year. What should investors make of that?
Yeah, this has put a giant hole in U.S. automakers' profitability, Elena. Both GM and Ford have reported in the last few days. Both of them reported multi-billion-dollar hits to profitability. The good news for Ford vis-a GM is that they only import about 20% of volumes of total sales in the United States. GM is closer to 50. And so if you look at their stock prices year to date, investors have rewarded Ford up about 8%. GM's down about 12. So it's a 20% differential based on the relative exposure to this tariff policy.
The aim of these tariffs, of course, is to bring car production chains back to the US. Does it make sense for the sector to do that? Are there any signs they're thinking about it?
Yeah, to some extent, there is certainly, independent of this tariff policy, Elena, there's already been a push to deglobalization, closer production to the actual sale location, national security issues, supply issues because of COVID. So this is a trend that was already taking place. And so this will probably accelerate it a bit at the margins. But in the words of the CEO of Magna International, one of the top 5 largest auto parts suppliers based in Canada, you can't just change, 1-2 decade-long investment decisions overnight. Those that require hundreds of millions, if not billions of dollars of capital expenditures every year. So this is really a short-term policy kind of chaos, when really what investors really need is a long-term understanding of the investment cases for where this production is going to take place.
Carmakers did get a partial reprieve on tariffs on imported parts last week. Does that help, do you think?
On the margins, for sure. There's basically a 2-year kind of offset from the Trump administration, allowing U.S. automakers to adjust for U.S. produced parts in terms of 25% tariff policy on the auto parts from overseas. That's helpful. That gives them time to kind of recalibrate. You're already seeing it on the margins, Elena. GM, which again has almost half of its cars that are imported, has basically moved about 50,000 units of production for their full-scale pickup truck from Canada to Fort Wayne, Indiana. I expect we'll see more across automakers in general try to move more production to the United States on the margins. The question is, will this be a real material impact to the U.S. automotive sector, a sector that's seen its annual production fall from 12 million units 20 years ago to only 10, even though global car production has increased from 65 million to nearly 100 million.
How able are automakers to pass those higher costs on to car buyers?
Right now, they're being really cagey, Elena. To date, GM and Ford both have resisted the calls to raise prices. If you look at what happened to Amazon, they were kind of had some political backlash from the Trump administration when he announced that they might be having, tariff costs put on their site listings. So what's interesting, very interesting about these quarterly releases is both GM and Ford refused to admit that they were going to increase pricing. Some of that's competitive, some of that could be political backlash fears.
It was interesting in your notes you mentioned that dealers in the US have built up a supply ahead of the tariffs, so sales have yet to be hit. But how long do you think this might take to work its way through the system to the consumer?
Good question. To date, like they were during the COVID pandemic, corporate management teams have been stellar in their execution of this issue. Almost all the companies have really cranked up their imports, gotten ahead of the tariff implementations. And so supply has been huge. Inventory has been very elevated, but it's now, Atlanta, getting back to more reasonable kind of standard levels. So in the weeks ahead, consumers are going to work down that inventory and future sales are going to be at the new tariff rates. It's probably going to reduce demand, and it's probably going to increase prices off of that reduced supply. So I would expect that consumers will start feeling it in their wallet as the year progresses. And I think that's one of the reasons why these automakers are pulling guidance, because even though it's pretty rosy right now, many of the automakers reported 20% year-over-year sales in April as investors, as consumers rush to get these cars bought. But as the year progresses, probably a lot of that's going to be accelerated demand, probably going to have higher prices. That's going to affect demand in the second half. And thus, there's a lot of consternation about profitability as we enter the second half of the year, Elena.
That was Lynch of Scharf Investments. Don't forget, you can watch more videos on Reuters.com.